Start. Good evening. The Madison County Board of Education regular session meeting for Thursday, April 21st, 2022 is called into session. Mr. Perkins, if you would lead us in prayer.
Let's bow our heads. Father in heaven, thank you for the opportunity to serve. Thank you for the opportunity to give of ourselves to our students, our faculty, our staff, our community. We ask, O Lord, that you would give us wisdom, knowledge, and understanding to lead aright, to serve aright. And help us, Lord, to do only those things that's pleasing to you and that's in the best interest of all those in whom count on us to make good decisions. Thank you for for the opportunity that you constantly give us, and help us, O Lord, to do right by our students and to honor you in the process is our prayer in Jesus' name. Amen.
Amen. Thank you, Mr. Perkins.
I recommend approval of the agenda dated April the 21st, 2022.
Motion.
I have a motion and a second for the recommendation and approval of the agenda dated April 21st, 2022 as submitted. Any discussion? Barring any discussion, all those in favor, say aye.
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 Informational items. Item A, semi-annual financial update. Ms. O'Bannon?
I think you can hear me. We don't have much of a crowd, but good evening.
Good evening.
I'm going to go, honestly, to share a few slides with you. Some are actually just lists and exhibits and cover pages, so it should be, we should be able to get through these pretty quickly. And also, this is a perfect time for the mid-year financial update, since we're closing out the month of March. And according to Ms. Rucker, the latest AASB plan training focused on finance. And there was some specific areas she requested an update. And Ms. Rucker, if it's not exactly what you needed, we can look at more detail or talk. You know, you can stop me at any time or ask questions at the end, whatever we need to do. I just did my best with what I had, but I think I'm going to cover everything. And I like this stuff. I don't know about the rest of you in the room, but I like this stuff. So hopefully you'll get something out of it and it won't take too long. This thing does not want to, but everybody can hear me, right? And you have a hard copy in front of you. So let's start. This is the March financial statement, the balance sheet that's on the agenda tonight for your approval. And this is the statement of revenues, expenditures, and changes in fund balance, or what we call the income statement. I will come back to these just to refer to a few things as we go through. Now, this is the monthly summary report for March. You receive, we're halfway in the fiscal year, as I said. You receive one of these every month. I send it to you with a little explanation of where we are and what's going on, if there's anything unusual in nature. So one of the things that Ms. Rucker mentioned was to understand the actual versus budget using a target percentage. And I share this with you monthly, but sometimes I don't spell it out. So I'm going to explain it a little bit how it works. And this is an easy one to look at. I'll get over here where I can see. It's easy to see the target percentage. Obviously, 6 months into the fiscal year is 50%. So you can see our revenues and our expenditures. Revenues are exceeding that because we have received, primarily the reason is because we've received all of our property taxes for real property. Obviously, our motor vehicle taxes come in monthly for those assessed values. So look at the budget expenditures. That looks pretty good, doesn't it? So unless there's an outlier or something, I should be able to tell you if we're not in line. Now, it may not look as good as this every month, but it should. If we budget properly, it should. If we monitor properly, it should, and take care of our budget amendments. So we're right at 49% of our budget. So 7 months would be 7/12, and that percentage would be 58, 60%. 8 would be 67% when we're in the 8th month. 9, 75%. So you get it, right? So that's what I'm referring to. And you see those every month. Sometimes I bring it out, sometimes I don't. But I just wanted you to understand how that works. Also, every month I try to explain that unreserved fund balance down under the balance sheet section. So, and I want to explain the number of days that covers. So if we take where we're at now with our expenditures and divide that by 6, we're right at $14.9 million per month in operating expenses. And that equates to $500,000 a day. The state bases it on 30 days. And so we're right at 100 days or 3 1/3 months. But again, that revenue that we've collected in property taxes, and you'll see it in a minute, it is up. We use that for the remaining days of the fiscal year, the remaining months. So, and we ended the fiscal year last year, if you'll remember, this is approximately 76 days or 2.5 months. So that's where we were at fiscal year end. So I try to share that with you every month. So I think everybody understands the target percentage now. But before going to the next slide, another area that I wanted to share with you is referring to cash. So every month I share this also with you in the summary report, and I share it with the directors, what the cash balance is for special revenue funds as well as general operating funds. So what I did, this is difficult to describe, but I've listed all the McBow cash accounts or bank accounts. So remember last fall when Compass merged with PNC, we went with Pinnacle. You guys approved them as our new depository because we could stay with our local team that we've been with for years, and we could get a much better investment rate in the manner and how they deal with their investments and their sweep accounts. So this is a list of Pinnacle. We have one CD left with PNC, and that's collateral for an ADECA loan we have for one of our Snyder projects. It's almost paid off. It's interest-free, so we just left that CD there. Then we can roll it over into our general fund. It's over $500,000. So anyway, these are our 9 bank accounts. We are, as it's on the agenda tonight too, moving our card program over to them. They'll handle our virtual accounts payable for those vendors that accept cards and our travel cards. So they'll have most of our business. Now these 13 accounts, this is our fiscal agent in Birmingham. We have the same guy, Greg Waldrop, that handles our accounts for our bond issues. So this is where we're making monthly transfers to meet those debt requirements for principal and interest as they become due. And he has been awesome to work with, and so I work with him on a monthly basis. Now we get over to our local school bank accounts. Some of our local schools, we've had difficulties. These are their general operating as well as their cafeteria, and some have some little savings account. But they have to make deposits daily, so they need a bank close, a branch close to them. So there's many with North Alabama Bank. Most of them moved their PNC accounts because they could not get them to transfer their child nutrition money to us on a weekly basis. They just would not without charging an arm and a leg. So most of those went to North Alabama Bank. We're just leaving PNC altogether. So that's what these are. These are all of our local school bank accounts. They reconcile them at the local schools and send their uploads to us monthly, where we check them, close the books, and upload them into our records, into those special revenue fund type. Now, you saw let's go back real quick. Okay, you see our operating account, that's the big boy, the first one at the top, general operating account. So every month, these are the funding sources that make up that general operating account. Some are general fund type, and all the federal or special revenue fund types. But the big accounts, these are all the funding sources that make up that one bank account. Child nutrition has its own, some of our capital has its own, but all the federal funds run through this. So you can see there's quite a few of those. So we do a reconciliation sheet for each one of them, but I did not put it in this PowerPoint for Dr. Minsky's sake. But we do a reconciliation sheet for every funding source. Then we bring those in to the bank reconciliation for general operations. So this lists our accounts and how that works. This is for March, and you can see our cash balance is $55,208, $254.33, and you're going to say, well, why? We're going all the way back. Why does that not match that cash balance up there? It's like $85,000 off. Okay, I'll tell you why, because some of those funding sources are in that special revenue fund type, and most of our federal funds are cost reimbursement. You spend the money, you request it. You spend it, so we're always in the hole until fiscal year end where we set up our accruals. That's how it works with the state. So it's going to be a little different because some of those are in special revenue fund type, but you can see how close that is to our book balance. And our book balance is the general ledger obviously shows cash by these funding sources. Okay? All right. That's what the bank reconciliation looks like for March. Before I go on, Gina does the treasury management for us. So she takes care of these reconciliations, and then I go through them and approve them. Jeanette Hunter does the accounts payable clearing, payroll clearing. Linda Tillman does child nutrition, and I work with Gina and Greg Waldrop closely on the debt service accounts. So, but I'm overseeing and checking all of them at the end of the month. So that's the process. Capital assets was another area to take a look at how we reconcile those. Now, we're talking about capital assets. Real property is threshold of $50,000 or more, and then personal property is $5,000 or more. That's the GASB guidelines. So these are what we capitalize in our books and post to our general ledger. So this was fiscal year end. We have $413 million at fiscal year end. So what we do, we reconcile all the payments, the capital outlay at the bottom for real property, personal property, and then what we're moving over at fiscal year end, if it was construction in progress, whether it's been 1 year, 2 years, or just part of the year, over to where it should go, land improvements. Most of it goes to building improvements and buildings, as you can see. Take it out of construction in progress and classify it where it needs to go if the project is complete. If it's not, it stays in construction in progress, and you do it at the next year. So, for personal property, vehicles, and equipment, we do this reconciliation every month. But for real property, it makes no sense to do all those every month because we're constantly getting invoices from our contractors and where it's changing. I'll show you how we reconcile those. But at year end, we do all of this. So this ties, see at year end, this ties to our fixed assets account group in our general ledger. And we also have detail for that $413 million. See the totals agree. We have a fixed asset. I also didn't include this in the PowerPoint because it's about that thick. Our fixed assets detail by facility, whether it's real property or personal property, by cost center, by transportation, IT, and all that. So we have the reconciliation, the GL, and the subsidiary. So during the interim period, you can see this is where we are in March, okay? See the 415,000? The vehicles and the equipment, again, we're reconciling monthly, so it changes monthly. The real property is the same balance we had October 1. But that 415, we're going all the way back, just to make sure you're awake.
You awake, Mark? You awake?
That 415, I need a little pointer. You see the fixed assets? You see the 406 and the 9.2 in construction in progress for March? That ties back to this, 415, 959 for the total. Now you're saying, well, how do you know real property is okay during the year? We have a spreadsheet for each project like this. This is just one example. Let me get to that example. This is a small one for the roofing replacement and freezer cooler at Riverton Intermediate. So once the bid's in and we know the architect fees, this is one that's being done by Snyder, so the architect fees are not shown separately. But we have a schedule of payments. Every time we receive an invoice, Joe and I work close, Mr. Kazort and I work closely with Jeanette Hunter, my assistant. She keeps a project file on every project that we have. And so I code the payments, she posts it, and at the end of the month, she makes sure her spreadsheet agrees with our general ledger for this particular cost center for this particular project. So we do that monthly. Then at the end of the year, if it's completed, again, we adjust it out of construction in progress to where it belongs, whether it's a new building or a new addition, or whether it's building improvements. So any project file that you want to see, we have that for every project, and I'll show you our projects again to remind you of those. So that's why we reconcile it during the year for real property. I showed you this a few months ago when we talked about the state bond issue. So I wanted to give you an up-to-date analysis here. Again, the yellow is our Snyder projects, and we've subtotaled at the top the state bond issue and the commitments there. So every file here, except some of the small ones down at the bottom that we haven't bid yet, for an example, Walnut Grove Roofing, the 160, we haven't bid that. But we have a project file for every one of those. For all the architect contracts, the state approvals, the bid documents, the Snyder agreements, the balance, and where we are every month. So the state bond issue was $22,918,000. This is the amount we've committed. We still can assign $785,834 to a project. So rather than using some local bond monies down there, for example, we could use that toward the machine shop for Career Tech. That's budgeted at $1 million. We're not sure yet what that's going to look like, but we can apply that. The state's holding that for us for wherever we need it. So that's all the projects. These are on the capital plan right now as funded. Of course, we can change that. You've worked with us long enough to know whatever, when the board looks at that annually, semi-annually, whatever, that can be amended as long as we haven't committed to an architect or a contractor. So that's our up-to-date for now, where we are with that. Some of the A&T money, we're coming in under budget, so as those bid, we're having a lot of problems. I don't know if Joe's on the call, on the live stream, but obviously getting folks to do the work, the lead time, trying to get supplies, materials, construction costs. So we're really having a difficult time getting a lot of this done this summer. And I know he'll bring you up to speed as to where we are. But this is still current and still what we're working toward.
Did you say the ones on the bottom? I'm sorry. The ones on the bottom have not. What was the difference in the ones on the bottom and the ones on the top?
They're just those, they're different funding sources.
Okay.
We're using some local bond money that we refunded some older bond issues to get a better rate. So we've still got monies left in there. And then we have the state advancement and technology funds that we receive every year that we can use part of that for deferred maintenance. And so you'll see at the bottom, we have 4 projects designated for that. But
Look at this list.
this is what our budget looks like, Mr. Brooks, for our capital. This is where they're budgeted.
Those are already in the budget.
Yes, sir.
We can't look at this list and know which ones are in progress or not, though, right?
No, not from this list, but I talked to Joe about it just Tuesday, and he said he was going to bring you an update soon. We can do that at the May board meeting so that you'll know. The majority of these are in progress. We're just having a problem with a few that are A&T monies, getting someone to do the job and to give us an estimate, but the majority of them are in progress. Some of the smaller ones, Ms. Rucker, like the boiler upgrades is needed. The Walnut Grove project, I know we haven't started those because there were about 3 that we don't have files started on yet, but it's some of the smaller ones.
Hey, Ms. Rucker, I'll put it on the May 5th board meeting for a construction update from Mr. Kazord as well.
Thanks.
Okay, and another area we were asked to look at, and this is our SR Money, Emergency Relief Funds, and where we are as of March 31st. If you'll remember, at fiscal year end and in our budget, I gave you the funds available. This expenditures to date is where we are as of March 31st. And you'll see the unexpended balances and the period of availability as to when these funds expire, and they have to be used by that time. So we have the Gear 1 and ESSER 1 CARES that go off this fiscal year, and we've got a plan for the balance. So each program has a separate sheet behind it that shows this is our balance. Now, when we use I think just our internet access for the remaining months of the year will take care of that, and that's where it was budgeted. We also have summer reading camp if we need to, but that one's taken care of. And this one is too. We've used this in various ways for instructional support, for instructional aids, for tutoring, and even for summer school. We're going to make sure this is closed out, but this is the end of March. So I'm working and projecting ahead as to what we need to spend every month, working with Mr. Solly and of course Ms. Bass to make sure this money, hopefully by the beginning of the school year, it will be gone. It should be.
And I don't doubt that it will, but my question is, if we have any left over, what happens to that money? We have to give it back to the federal government?
We lose it.
Lose it.
And it's not pretty. It's kind of like a citation, not a real citation, but a slap on the hands. It will be gone.
Okay, then that's fine. I don't doubt that it will. I just was curious as to what happens. Okay.
We lose it. We don't want to do that. We have time for the other sources so we can, so this is again, the 2022 is in red because that's the fiscal year we're in, but the balance, let me look at that cover sheet again. This is our SR2 monies, and the total that we were allotted was $9.3 million for this particular, so we have a balance of $4.1 million, but we have until 2023, and this is how it's being used currently. And I'm going to start as we get closer to the availability times expiring, working monthly on these and giving Mr. Solly more updated information. But we're on target. Then this is our SR2 reserve. Monies set aside for these purposes, and the balance that we have that goes away in 9/30/23. This is our big boy, our SR3. It will use primarily the same manner once the SR2 runs out so that we can have the extra support in our local schools. And we've added a few other areas, including some additional technology and textbooks, and just have these in the budget in case we have a need. But we've only spent $96,000 of this, and the majority of that will be used in future periods. This is our reserve. We have not touched this amount yet. We have until 2024. We'll start using some of that next year. And then we get down to our Idea B for our special needs population, and the two pots of money for that. One's for K through 12, and the other is pre-K. And then our last is the homeless American Rescue money, or the. So, if you have any questions about the ESSER money and you need any detail about those line items, just feel free to let me know. I just wanted you to know we are on target for spending the money before it expires, or the availability of funds expires. Other information, this is the last section. I wanted to give you a comparison, a revenue comparison and a projected for our property taxes. Again, all of the real property has been collected. We get them monthly from the license department for motor vehicles for those assessments that are on your tag receipt. So this is actual. You can see we're up like 12% in property tax collections. That's why our revenue was higher than the percentage projected for this particular period of time. And then our sales taxes. Now, that projection is conservative. It's a 12% increase. It could be more, but you know I'm conservative Karen, and I want to make sure, we don't know what this inflation rate's going to do, and if it slows down purchasing, or what the interest rate increase is going to do. But that's the projection for fiscal year end. And I know the TVA because it's pretty much the same every month, so that's what that looks like. So we're looking at like a 12% increase across the board except for the TVA. That's for our local revenues. Also on the expenditure side, instructional services actually went down when you're compared. Now remember, we're cutting off mid-year. Several reasons for that. The majority is that we've used ESSER funds for some of our instructional supplies and our software that we didn't have to renew this year. Some of it is because we didn't fill all of our positions for the entire period. I mean, they were in and out, and we've had a lot of turnover. And the majority of it is because the $5 million we received in A&T monies is in our. We haven't spent all of that. We've ordered our buses, but until you pay for them, it doesn't show up here. Now, that wouldn't be an instruction. That would be in auxiliary services, but there's several things under instructional support services that we haven't paid for yet in the A&T. But everything else you can see has a normal balance, typical for what we should expect compared to this time last year. On auxiliary services, that's the result, as you can see at the bottom, of increased fuel cost. And I'm projecting that to be, at the end of the fiscal year, we'd probably be $250,000 over our budget for fuel cost. Because in 6 months, we're close to what we had last year, the entire year. Of course, last year we did have some remote learning more than this year, but still, fuel costs are definitely impacting transportation. Everything else right now is pretty stable. Also, our salaries and benefits represent, when you're just looking at this, this doesn't include contracts or anything like that, represents 80% of expenditures. So it will end up with the 83% that we projected. And we'll look at this again at fiscal year end, as we always do, or before, just to give you an idea of what it's looking like. At the end, I'll share some things with the inflation rate and what we're looking at, but it's real, and we're already seeing it in the second semester of the school year. That's how quickly it's impacting our cost, especially, I'll just tell you now, instead of the end, especially with our bids that are expiring this spring. We're seeing, as they're coming in, a huge, of course, some of them we've renewed for 4 years, and they haven't changed the cost. But there's an average of 4.5% per year inflation rate if you look at it over that period. And that's what we're seeing with custodial supplies, with our waste management, with our operation supplies, and we already talked about construction supplies, and even if you can get them because of the demand. And we have several bids, as you'll see tonight, that we can't get anyone to commit to a bid because we're asking for a year. We may have to start bidding some areas 6 months rather than a year, just to get someone to respond. We can always reject and negotiate, but we'd like to have at least 2 bid responses. But it's difficult right now for our vendors. They can't hold the cost.
So is that the reason why they're not bidding it for a year, because they can't hold the cost?
Yes,
Or they
sir.
don't have the people? Is it because they can't hold the cost for a full year, or because they can't hold the personnel in place to do the work?
The combination, but it's mostly because they can't hold the cost of materials and the demand for materials. They just can't hold the cost for a year. So, and that's what our bids, our terms are, a year with option to renew up to 4. Well, they're probably not going to exercise that option, but a lot of them are just not bidding for a year. We can go to cooperatives, though. We have that. And I wanted to show you before I start talking about payroll, and this is, you've probably seen this before when we do a bond issue, because we include this for our bond rating companies. This was in the recent Initiatives magazine that's put out by the Chamber. We've moved from number 8 to number 9, but still, as far as the top, we're in the top 10 leading employers in Huntsville, Madison County, which that's huge. We have, with the SR units that we've added, that's around 2,400, but this is the latest information they had. And so that's pretty accurate if you set aside those that are paid from federal SR monies. We have 2,389 employees on this. We really have around 2,400 when you consider our SR units, those that we've added in our classrooms. And in saying this, I wanted to explain briefly what I'm doing, and I've talked to, it just leads me to the most critical area in the business office, which is payroll, which obviously is the livelihood of our employees with their pay and making sure it's accurate, and their benefits. This is the one area that I do sometimes lose sleep at night over because I'm responsible for that area. The others, we make a mistake, we can do a journal entry. You know, we can catch it the next month. Payroll is scary, especially in the insurance area, and they've just been overwhelmed for quite a while. So this is our current structure for the business office org chart. We've just had more, with SR money, we've had more transactions, obviously, more employees, which will continue to grow when the SR money goes away, more contracts, supplements, and handling all the retirements and everything. It's just a huge, huge undertaking. So I have concerns for a backup for our payroll manager. We don't have someone that can do everything that she does and knows how to do everything that she does. We just have not had time or an opportunity to fill that. So what we're doing, and this, I've already started this, and I've been talking to Dr. Minsky and Mr. Perkins about this since last fall, and I've recently been talking to the executive team about it. We have now this has nothing to do with payroll, so be patient with me. This is the last section. We have the purchasing agent who is a local school liaison. She helps upload their monthly financials every month and helps them with their budget. Then we have the local school accountant, internal auditor, that does all the day-to-day. We have so many new bookkeepers. About a third are new. So Brittany, I don't want to use names, but our local school auditor, bookkeeper, central office goes out and she's in the schools probably 3 days a week and here 2 days a week and trying to keep up with everything. So that put more on the purchasing agent, who's also our local school liaison. So she needed the half-time purchasing clerk position to come there to help her with the day-to-day purchase orders and things of that nature. She still primarily handles all the bids. She does. So with that half-time CMP eligibility person, they also did purchase orders for CMP, so the purchasing went with them. So I have restructured, and we've already done this, to reduce the CMP, moved the purchasing clerk to full-time, and again, she took a lot with her that is CMP because of the purchase orders. So that leaves we've restructured for our 2 CMP bookkeepers, and this is a restructured proposal for an assistant payroll manager. With the idea, we've used a contract person this entire year. She's awesome. She's had some health issues and has not been able to work much since December, and we're just dying. We really are in that area. So to eliminate contract help there, I want to add an assistant payroll manager. We may not hire it for 6 months, 4 months, who knows, but it has to be a person that will be a backup to the payroll manager and know every duty, and also a succession plan for our payroll manager. Because we would be in a mess. This is our most critical area, and with 80% of our budget in that column right there, it's crucial that we have the right folks on the bus. So, and we'll see with those duties, once it's all in place, through attrition, what we may or may not need in the other areas. But right now, this is what we need. And where this would go, on the salary schedule, I don't know if you can see that. This is the business office. You have it in front of you, though. So if you look at that last page, next to the last page of the PowerPoint, we have an account systems manager under accounting supervisor, that account systems manager. What we did years ago, we combined and eliminated, this was years ago, about 10 years ago, time flies. We eliminated a federal programs bookkeeper and brought those in, to track federal programs monthly reports, fixed assets, and do our accounts payable virtual checks or virtual payments to one person account system supervisor. So that was put on a different pay scale than the clerks, all the others. And that's where the proposal is to put the assistant payroll manager. Again, it's for a backup, it's for the workload, and it's for a succession plan. And so I wanted to talk to you about that as we look at the budget and what's all involved with payroll. So I think we talked about this. In the summer, I will bring you updates, the impact of inflation, what that's going to look like. I think we would probably just be most concerned when we're planning our budget for fiscal year 2023 as to what that's going to look like. I do know the fuel, I explained that to you. We're already seeing an impact with that, but we may be over budget there, but there's other areas that we can absorb that. Capital projects will continue to keep you up to date with that and what those as we just talked about, the supplies and the lead time for getting a lot of the materials that we need. I did calculate the cost of the pay increase, the 4%. It's a total of $1.2 million. $750,000 of that, it will be a recurring cost. That's for locally paid individuals that we have that are locally paid as it stands right now. So that will be recurring costs for the 4% raise. The state does not fund that part. And then the remainder it begins in July 1 to backfill everyone from July, August, September. With teachers, their contract does not start till September, so it's just 1 month for them. So $1.2 million for that. wanted to give you an estimate on that in case you were asked. So that's all I have. Do you have anything else or anything, any questions or any more detail that you would like for me to share with you? I can do that one-on-one or bring it to the board as a whole. But I hope that helped.
Thank you.
Thank you, Karen. Appreciate it.
Thank you.
Thanks, Ms. O'Bannon. Informational item B, Madison County Board of Education Policy 7.12.1 and .2 updates. Ms. Bass?
Mine is much shorter than Mrs. O'Bannon's, so it was wonderful, very informative. We recently had compliance monitoring, as you all know, and federal programs is a portion of that. And so we had a great review, but in our EL program, which is our English learners, they had one recommendation for us, not a citation, but a recommendation, for us to update our board policy to reflect most current language that is used to address that population of students. So in the evolution of my career, that category of students who come to our schools with having a language other than English as their first language have been called ESL, which is English as a second language, ELL, which is English language learners, and now they've transitioned to EL, which is English learners. And so in our previous board policy, it referred to this student population as English language learners, and they asked us to take language out and just leave English learners. And so that is the update. We have sent it to the State Department. They have approved the change. And so I would like for you all to consider approving it so that we can update it in our board policy manual. Any questions?
7.2.
Federal programs is very detailed, and every little detail is gone through with a very fine-tooth comb. So, but I feel very good that this was our only recommendation. So,
Questions?
anything? Okay.
Thanks, Ms. Bass.
Thank
Thanks,
you.
Carrie.
They pretty much told us we had to do it, so we have no choice. She's just, you know. She's just showing it what it looks like in the policy. Thanks, Carrie.
Thanks. Administrative items. Item A, I recommend approval of March 2022 financial statements and payments of bills as submitted.
Second.
I have a motion and a second for the recommendation and approval of the March 2022 financial statements and payment of bills as submitted. Any additional questions of Ms. O'Bannon? If there are none, all those in favor say aye.
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 Item B, I recommend approval of the Pinnacle Purchasing Card Program as submitted.
Second.
I have a motion and a second for the recommendation and approval of the Pinnacle Purchasing Card Program as submitted. Any discussion? If there is none, all those in favor, say aye.
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 Item C, I recommend approval of the bids as submitted.
Motion.
Second.
I have a motion and a second for the recommendation and approval of the bids as submitted. Any questions or discussion? If there are none, all those in favor, say aye.
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 Item D, I recommend approval of contracts for services as submitted.
Motion.
Second.
I have a motion and a second for the recommendation and approval of contracts for services as submitted. Any questions or discussions? All those in favor, say aye.
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 Item E, I recommend approval of the personnel items and addendum as submitted.
Motion.
Second.
I have a motion and a second for the recommendation and approval of personnel items and addendum as submitted. Any questions? There are none. All those in favor, say aye.
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 Item F, I recommend approval of the supplemental contracts as submitted.
Motion.
Second.
I have a motion and a second for the recommendation and approval of the supplemental contracts as submitted. Any questions or discussion? All those in favor, say aye.
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 Aye. That brings us to the end of the agenda. Each of you should have gotten a listing of the scheduled meeting dates starting on June 2nd. But I don't know, Ken, we'll probably have maybe in another additional personnel meeting if necessary in July, if there's a reason to come together. Okay. Good. All right. Sounds good. All right. Okie dokie. I think that kind of closes it up for this evening. Appreciate everybody being here, and we will see you at the next meeting.
Motion to adjourn?
Second.
I have a motion and a second to adjourn. All those in favor, say aye.
Aye.
Aye. We are adjourned. Thank you for coming this evening.
Hey there, Mr. Vice President.